Good evening, everyone. Dan Bird here with the Daily Scan for March the 3rd, Monday, starting a brand new week. And looks like Mr. Market is getting ready to tumble off the cliff. So our market's in free fall. Sure seemed like it today after confirmation that the um, Canada and Mexico tariffs are likely going to go into effect tomorrow. Interestingly, the market pulled back just about to our line in the sand, 58.50. So we'll take a look at that. Interesting day today. So as always, I'm not a financial advisor. I am doing this for educational purposes. And you have to understand your own investing style and make decisions accordingly. So let's take a look at what happened. First, we'll go to the home page and look at market bias. Went down again today, not quite as steeply as before, but it's kind of running out of things to go bearish, frankly. Except if we start moving into the medium term trend, those would be next to start to go bearish. You can see it right over here. So the left-hand column is short term. You can see how red it is all the way down. In fact, 16% bullish in that column. In the medium term, 49% bullish. So there's still some greens there. So that's the next step. That's where we're going to head next. If the market continues to go down, then these here in the center, and they're starting to turn red a little bit, will be next. And then finally, the long-term one changes. And I actually put this over here because way back, probably a couple of years ago, there was articles written about the market being in a death cross, which is where the 50-day crosses the 200-day. And so that's why I highlighted this right here. This will tell you whether or not it's in a death cross for the S&P, the NASDAQ, and the Dow. If one of these turns bearish, then that is a death cross by definition, 50 crossing the 200. But back 2 years ago when that happened, 2 days later, it reverted back, went back to bullish. And all of those articles, the people that wrote those articles, funny thing, they never wrote another article that says it's no longer a death cross. In fact, that would be the definition of a golden cross when the 50 crosses back above the 200. So that happened very quickly a couple of years ago. It has not happened since. So this has been bullish for quite a long time. It'll have to take a lot for these things to happen. We're pretty far above those levels right now. So we certainly could get a correction, and a 10% correction is normal. Usually each year there's at least one 10% correction. We have not had one for 2 years now, going on 3 years now. So we are due for a 10% correction, and that would be normal and healthy for the market if that happens. And maybe it's just started. We'll see. All right, let's take a look at some of the charts. I'm going to go back to the home page and look at the S&P. So S&P today, and this is going to look similar with most of these, including Bitcoin, by the way. Bitcoin is an interesting chart today. So this big red candle right here, for those of you who tuned into my Technical Tuesdays when I talked about candles and how to interpret them, and anyone that hasn't seen that, you can go back on the YouTube channel. There's a playlist there for Technical Tuesdays, and you can go back and find the one on candles. And I said at the time that something like this is called a bearish engulfing candle. It basically engulfs all of the previous day's move. So all of that bullish move we had on Friday, today completely wiped it out. We started off a little bit higher in the morning, but by the end of the day, it had completely wiped out everything from Friday. Let's look at the NASDAQ 100. And you'll see a very similar look, even a bigger bearish engulfing candle. Completely engulfs everything, all that gain that we had on Friday, all of it given back. In fact, let me go back here. You notice where the S&P ended today. 58.49.72. And remember what I said the line in the sand was? 58.50. Well, it's never an exact number. So you have to think of it as a range or an area, but we are right at that area. It actually went below that today, even lower than the last two days. And we came back a little bit and closed right at that 58.50, basically, right at that 58.50 level. So pretty interesting. We'll have to see what happens tomorrow. See if we get a bounce from there. But with the tariffs taking effect, unless something happens overnight, which is certainly possible, to negate those, then it's going to be a very volatile week, I think, especially with the jobs number coming up at the end of the week. How about Bitcoin? So Bitcoin's chart, not only a bearish engulfing candle, but it almost exactly gave back everything from Friday. So it opened right about where it closed Friday, and it closed just about where it opened on Friday. So again, a very bearish candle for Bitcoin. It's following the rest of the market. Bitcoin is highly correlated now to the NASDAQ 100. So the NASDAQ falls, then so will Bitcoin. So that's where it is. Just out of curiosity, let's look at Michael Saylor, see what he's up to. So that one looks a little different. That one actually opened pretty much higher, closed this gap right here, but sold off all day long. Still ended higher than the open from Friday and the close from Thursday. So not as much damage as the other ones, but still big volume too today. So you can see up here, this is the momentum, and this has been below zero since way back here. Actually right there. The horizontal black line is below zero. That's on the MACD PPO. I overlaid the MACD on top of John Carter's squeeze, just so I could see both of those in the same panel. That's basically what this is doing right here. So the MACD zero line is that black horizontal line, even though the squeeze line is up here a little bit higher. But that's okay. It lets me see both of them at the same time. And you can see the squeeze that it was in back here. This was a squeeze to the downside, clearly. And then there was a little tiny squeeze here that didn't really do much. And we are continuing to accelerate to the downside. So this is still, everything is still very oversold. NASDAQ 100, I mean, this is still going down. It's not curving up yet. So this could still continue. Volume was a little higher than average. So that could continue going down. The S&P, same thing. Looked like it was starting to turn, but now it's accelerating to the downside. It's separating, getting further apart. It's diverging. Instead of converging, like here, it's diverging. So that's why the lines are heading down. It's below zero, and it's why the histogram for the squeeze is also below zero. So everything's pointing to more selling coming up. We'll see. Hitting that 58.50 is a really key level. And technically, it may bounce from there, but I actually thought we'd have a bounce last week. But I think this is mostly due to the tariffs. I think everyone thought that they might be delayed or canceled even. But instead, it looks like they are going to take effect tomorrow. So we'll see what happens. All right. Let's take a look real quick at the 10-year. 10-year Treasury continuing to fall, continuing to go down. So there's the 10-year Treasury. You know, I said the target would be 4.25, and now it's well below that. It's 4.18 right now. And no signs of letting up. So this might continue down as well. You would think that would be good for small caps especially, or anyone that is interest rate sensitive, but I think this is signaling that the economy is starting to roll over. If you read my newsletter last weekend, then I put in there the projection for GDP is negative for Q1, and I talked about what that means as well as a lot of other things. So you can just come to breakpointtrading.net and click on this little box here, get the newsletter for free. This is also where the YouTube channel link is as well. So all of that's right there for those that are interested. By the way, I want to thank everyone that joined my Zoom call on Saturday. Saturday I had a Zoom call for subscribers, and I record the call. So here's all the previous ones over here on the left. This is the one on Friday. It was actually a little more than 3 hours. So lots of different topics, great questions from participants. I showed a few new things on the website that are interesting. And then we just open it up for looking at stocks, talking about technical analysis. I answered any questions, every question pretty much that people asked. And we looked at quite a few stocks for folks and discussed them. And there was good participation too from different people using their own personal experience and expertise, talking about stocks and what they mean in that particular industry. So it was I thought it was a very fruitful, beneficial session. Anybody that's watching this YouTube video tonight, if you attended the workshop, the Zoom meeting on Saturday, give me your feedback. I'd love to hear what you thought about it or anything that you would like to see in the next one. I try to do them once a month, so it might be probably mid-April when I might do the next one, right around tax day. How about that? All right. But thanks for everyone that joined. I really appreciate it. Let me now take a look at, first of all, the portfolios page. I want to talk a little bit about the market timing strategy and the fact that it is still showing long, even though the weekly went below the 21 moving average. So there's where it went below it right there today. However, this is a weekly. So these do not complete until Friday. And you can see what happened last week. This one went below it as well, and then ended up above it, closed above it by Friday. So even though we're below it right now, and you can see one back here as well, this is back in August, this one went way down below it, but still came back and closed above it. So this is a weekly signal. And what that means is we cannot know what that signal is going to be. We have to let it go through all the volatility of the week and see what it looks like on Friday. Now, what that means is, yes, it could continue down. It could be much lower than this by Friday. That's just the risk that you have to take. This is one of the rules of this strategy. So we are not going to get out just based on this for today. We're going to wait till the end of the week and see what it looks like then. Now, if it stays like this, or if it's slightly below the line on Friday, then yes, we will move to cash. And the indicator here will show cash in that case. We've already gone to cash on the short term, the daily one. So you can see over here now the long term, which allows for long-term capital gains because it's been long since November of 23. Now with today's movement, the performance is 36.5%, whereas all the cumulative short-term moving in and out of the market over time. And right now it's cash, so that's not going to change. So it shows 37. We'll see. We'll see what happens when it finally closes. Now, at some point, if the market really clearly shows that it's going to continue to head lower, then we're going to move this to a sell signal and then start looking at the inverse ETFs. And if you look at the triple SQQQ, you can see already that it went back up and made another high. So, back here would have been a good time to get into that. But we are in a secular bull market, so it's hard to make moves into the short side when the market is remaining and continuing to be bullish. I'm expecting to see a bounce at some point, but I don't know when that might be. It could just continue going down, and this might have been the right time to get in. But right now, I'm not comfortable getting into this, especially when the signal is still showing a bullish signal, a long signal. So that's the status on that. Let me take a look at the VIX, because the VIX today went above 20 and pretty much stayed there. So that's another warning signal. The VIX, you can see right here, huge move, ended at 22.78. So it had gone above 20 before and then pulled back the next day. So we'll see what it does tomorrow. But you can see the rate of change has just been moving up steadily. And this is creating higher highs and higher lows, just like with a stock or any other index, anything else you want to chart. It applies here as well. So the VIX, if it stays above 20, then bears are in control, and that means the market will continue to go lower. And I think it will go lower. I'm just not confident that it will continue to go straight down right now. I think there will be a bounce at some point. It's oversold at this point, but who knows? All right, so let's take a look at a couple of stocks that people ask me about. Lilly, of course, is one that everyone has been talking about lately. Lilly would have been the one to be in today. So as everything else was falling, Lilly actually continued to make another new high. It is continuing to go back up to get back to the recent weekly high way back here. I think that's at about 950. Let's see if I can figure that out. It's at about 965. So that's where resistance is, and it's not far away from that. So today it ended at 930 roughly. So it wouldn't take much to send it back up there. I'm expecting it to take a break, probably come down and make a cup and handle. That would be ideal. That would be a perfect example of Investors Business Daily cup and handle, especially on the weekly chart. So here's a little cup right here. If it comes right up to about just right around the 950 area, and then pulls back again, even down to the 21 day, which is all the way down at 835 right now. But it may not pull back that far. Let's say it pulls back to 850, something like that, or even 900. It'll form a little handle, and then when it breaks out of that, it will continue to go higher. So keep an eye on that. For those that are interested in Lilly, there might be an opportunity to add or get an entry. Here's the 21 day at 872 right over here. This is the daily. This is a weekly on the right side. And then you can see with the Keltner channels, it's hitting right up against the extremes right now. So the top of the 3X is 941. So that's roughly, I think, right around where it probably will pull back, come back to the mean, which is at 870. Well, that's rising. So it'll probably move up to about 880, something like that, 890. But that's where it probably will pull back to before continuing its run higher. Lilly was the one bright shining star today. One of the questions was on Berkshire Hathaway. So here's Berkshire. You can see on the weekly, it's making new highs, broke out way back here, 491. And so today it's at 510. Definitely at the extreme as well on the Keltner. So this likely will pull back here shortly, probably back to the 21 day around 490, 500. But it's been having a really good run as well. I mean, I think with Warren sitting on so much cash, everybody has to be marveling at the fact that the market's falling while he's continuing to build his cash reserves. So the question was, what is the target for this? I don't know. I don't necessarily like to pick targets. I would rather just let it run. But it's already making new highs. It's already in blue sky territory. It could just continue to go up. Now, it won't go straight up. It'll do like what it's been doing here. It'll go up and pull back and make another high, and pull back and make another high. So watch when it pulls back. You can see the 21 day seems to be a place where institutions like to add to this. A couple of times it went through it and just barely got down to the 50 day. But keep an eye on the 21 if you want to add to Berkshire Hathaway, because that's where all the institutions are adding. When it gets right around the 21 day, they're adding there. Okay, another one was an interesting one was Go grocery outlet. So they reported here missed earnings and dropped considerably. But I think the question was this perhaps is a story about the consumer, and that's probably true. It's a grocery store chain, wholesale groceries, I believe, but it's not doing very well. So I think the consumer may be tightening their belts and starting to become a little bit more choosy about what they buy. You can see a big, huge gap down. It's at the extreme, but it's continued to go down today. And on the weekly chart, it just doesn't look good at all. So from a chart perspective, it looks terrible. But if you talk about it in the context of the consumer, I think that is probably a pretty astute way to look at that one. There is, let's see if I can find it quickly. There is a chart in here on, yeah, here we go. It's discretionary versus staples. I showed this before, but it's continuing to go lower. So discretionary are things we would like to buy. Here are the weightings for XLY: Amazon, Tesla, Home Depot, Nike, and McDonald's. And XLP are things that we have to buy: Procter & Gamble, Pepsi, Coca-Cola, Costco, and Walmart. Costco's been doing great, by the way. Now, some might say that McDonald's is something you have to buy, but that is subjective. At any rate, the way to look at these two groups is when the market is going up, when the economy is healthy, when everyone is happy, then they buy things that they have been wanting to buy, like TVs and vacations, things like that. And when the economy starts to roll over, they start buying things they have to buy, and they stop buying these other things over here. So this can give you an indication under the covers what's going on. And in this case, you can see ever since basically the middle of January, staples has been significantly outperforming discretionary. So the rotation now is into the defensive areas. And in fact, I'm going to look on the dashboard and show you something here. I just changed my dashboard a little bit. And you can do this for those that have stock charts subscriptions. There's lots of different things you can do with stock charts. In fact, on my website, for those that might be interested, there is a link on here to the stock charts page. I think it's on the chart list and scans. Chart list and scans, there's a link right here to the stock chart subscriptions, and it shows you the 4 different levels. So free gives you a little bit, basic gives you a little bit more, but it's only 1 chart list and 1 scan. I am at the extra level, gives me pretty much everything I need. And then the pro level is here. So if you want to sign up, you can come here. They often will have specials. So let's see, I'm not sure the special is going to come until maybe Memorial Day. They might do a special. And usually they'll give you like 3 months for free if you sign up, that type of thing. So I'd want to watch for that if you want to sign up. And they also have a free trial that you can use as well. So that's something you can do with stock charts. So on the dashboard, I changed it up a little bit. So over on the left-hand side, I had the sector summary, and you can see right now, these are all defensive sectors: real estate, staples, healthcare, utilities, all defensive. The aggressive technology, discretionary, and communication services are in the bottom relative. This is just for today. So that's the S&P. Then what I added was the advancers and decliners. And this is interesting because it shows you, for instance, with discretionary, 86% of the stocks in this sector were declining today. And technology, 85% were declining. So that's telling you, and discretionary, 86%, communication services, 73%. These are the aggressive sectors. They have more decliners than they do advancers right now. Staples actually had increased a little bit, but it still has more decliners. The only one that outpaced was utilities. Utilities is the most defensive area. It had 58% advancers and 39% decliners. And then I also added over here the Dave Keller market model. This is where I got the idea for the trend models that I use. And by the way, I just added Eli Lilly to the trend model. So for those people that have asked for that was one of the questions on Saturday on the Zoom call. Some folks wanted me to add Eli Lilly back in, which I just did. I'll show you that in a second. So here's the industry groups. You can see water, utilities was the #1 industry group. And if we go back here to the website on the charts page and look at water, this little box right here will show you all the stocks in that industry group. So York Water, the one that did the best, 15% today, was Middlesex Water. It's probably in Massachusetts. You can then view this on a year-to-date basis if you want to, and it shows you who the winners are year-to-date. So if this is one of the strong industry groups, then this is a quick and easy way to find the stocks that are outperforming in that industry group. So that's the way to use that. The rest of these, Staples, communication services. So there's one, mobile telecom. Staples, real estate. Here's another communication services, also telecom. Staples, utilities, and real estate. So we've got 1, 2, 3, 4, 5, 6, 7, 8 of the 10 are defensive industry groups. And on the top 10 combined list, this one here, Gorilla Technology, has been doing really well. It actually did well even today. App had a huge sell-off and actually moved back up a little today, but not looking that great. One thing I want to show is the number of, let me see. So we've got Abbott Labs. That is a healthcare. I want to show the large healthcare companies. So this is in the second group. So this is 20, the top 20. Abbott Labs going up nicely. On the third one, Option Care, Gilead Sciences. That one, those two are in healthcare. The fourth group, we have AbbVie. It's in healthcare. The fifth group, so these are the top 50. Now we have Lilly in that group as well. So healthcare has actually been looking pretty good, starting to recover and come back. So if we go over here on the healthcare sector, depending on which ones you wanted to look at. So if we look at pharmaceuticals, for instance, it'll show us the top names. So TGTX, this one had been in the top 10 for quite a while. And if we look at it on a year to date, there's the names in pharmaceuticals. Intracellular, I think, was just acquired. So anyway, that's one way you can kind of check out different stocks or find the performers. So that is the dashboard. Here's crypto. Here's Bitcoin. Bitcoin last Friday did really well. In fact, even through the weekend, because Bitcoin trades 24/7 through the weekend, continued to go up, and it looked like it was really going to blast off. But instead, it came back down and gave back all of the gains that it had made on Friday. Gold actually started taking off as well, going higher. Natural gas, it's moving higher too. Gasoline pulled back. Here's bonds. TLT is actually looking really good. I think that it's it is probably part of that discussion about the economy beginning to falter. And if the economy starts to falter, then this is an area to go to safety for 20-year bonds. So TLT looks like it might be making a move higher. Let me actually look at TLT on this chart. And there it is. So there's a gap up right there. It's above the 200-day now. Everything is looking really good. It's going to have to get above this 93.70 area of resistance. And it's right at the extreme right now. So this one likely could pull back, come back down to probably 90. And I'd be watching that. If you wanted to get into this, that would probably be the area to do it. But all the momentum on the weekly chart is to the upside. So this probably is going to continue to go higher. Might have a little pullback in through here, but this one now, TLT, the 20-year bonds actually look pretty good. All right, that's it for today. Let me know what you think. Let me know if you have any stocks that you'd like me to look at or anything else you would like to talk about. Thanks again for everyone that participated on Saturday. We had a really big group, biggest group I think that we've ever had. And I appreciate it. I appreciate all the questions from everyone. Thanks. My website, those that are interested, breakpointtrading.net. And you can sign up if you want to subscribe. You can do a $0 just to get notified that the newsletter is available. Doesn't require a credit card, and we don't share emails. Or you can do a 7-day free trial using the monthly, which gives you most everything, but not everything. And then $99 for a year, which is actually pretty cheap for all of the content that's on here. That gives you everything, including the monthly Zoom calls and everything else that we do. All right, thanks everyone. I appreciate your watching. Please like and subscribe if you could, and I will talk to you again tomorrow. We'll see what the market's going to do the rest of the week. Take care.